As a trader predicts capitulation will happen, Bitcoin clings to $19,000. While observers wait for excitement to pick up again, a dull weekend causes BTC price movement to completely obliterate any traces of the week's turbulence. In today's video, we will learn about how the price of Bitcoin erases any traces of the week's volatility over a quiet weekend, as observers wait for the thrill to return. At Finance Doc, we will be sharing more explanation videos related to cryptocurrencies, trading, forex, and many more. So watch this video till the end and hit the subscribe button. And click on the bell icon to get notifications for our future videos. So let's begin the video. Analysts think BTC volatility is only a matter of time. BTC/USD had a disappointing weekend as the pair barely moved during after-hours trade. Bitcoin reverted to its original position and, as of the time of writing, showed no symptoms of departing from its established range after United States economic data throughout the course of the week prompted a series of typical fake-out events. According to Michael van de Poppy, founder and CEO of the trading platform 8, the uncertainty would return to cryptocurrency, not if, but when. One other well-known commentator, the anonymous Il Capo of crypto, believed that a bear market relief rally might see $21,000 return before the downside continued. The week's macro figures managed to inspire a run to one-week highs for BTC/USD. Prior to the weekly close, they expressed their optimism for the entire market in a Twitter update. Part of a debate on the market outlook that followed included them adding, "Capitulation will happen, but not yet." With that, Bitcoin was on track to end October 2nd week down 1.5% from the beginning of the month, which would have been its worst performance since 2018 and a long cry from the 40% gains from 2021. Future stocks cloud crypto. Looking ahead, investors in the market saw continued linkage to stock markets as evidence that Bitcoin's short-term prospects were less than promising. Social media was flooded with comparisons to the dot-com disaster and the 2008 global financial crisis. After the Nasdaq Composite Index experienced its first weekly closure below the 200-period moving average in 14 years. Thank you for watching this video. If you like this video, don't forget to hit the like button and subscribe to the channel so that you don't miss out on our upcoming videos.